Usually when we think about our lives,
Hmm.
our memories, our relationships, the daily choices we make, we picture them written down in a diary.
Great. Yeah.
Like it's deeply personal, it's emotional, it's driven by the heart, the soul, our intuition.
Right. Wait, we inherently like to think of our personal lives as the safe haven.
Yeah,
We treat it as a sanctuary that is completely insulated and separate from the cold, calculating world of commerce and
it's
capitalism.
exactly like two different worlds.
The general consensus is that we go to work to deal with the money, and then we come home to experience quote unquote real life.
But what if you took that personal handwritten diary and you swapped it out for a corporate general ledger?
Oh, wow.
Like, what if every single part of your life, from the person you decide to marry to the prayers you say before bed,
Yeah.
is actually governed by the ruthless, incredibly cold rules of business?
I mean, it completely changes the lens on reality.
It really does.
When you apply that framework, you suddenly start seeing the elegant, if somewhat brutal structure of how we survive and thrive under conditions of scarcity.
Yeah.
It removes all the romance, sure, but it replaces it with pure, unadulterated mechanics.
And that is exactly what we are unpacking today. Welcome to this deep dive. We're exploring a really fascinating, incredibly blunt article from Support Tips.
Blunt is definitely the word for it.
Totally. It's titled Principles of Business: Why Life, Love, Law, and Death Run on the Same Principles.
Yeah.
Okay, let's unpack this.
Let's do it.
The core mission of this deep dive is to look at the argument that supply and demand, profit and loss, return on investment, these aren't just Wall Street terms confined to a trading floor.
Right.
They are the literal skeleton beneath every single human transaction. It's not about being cynical. It's about having absolute clarity about what we are doing every day.
Exactly. The central premise asks us to, stop drawing these artificial lines between the rat race of the economy and our shared humanity. Because when you peel back the emotional skin of any interaction, the underlying physics are exactly the same. You are exchanging value.
Always.
Always. So to really understand how this works, we have to start at the absolute beginning of the human life cycle.
The very beginning.
Yeah, we have to look at our most intimate assets, our bodies, and our relationships. The framework suggests that from the moment you take your first breath, you are essentially managing a personal balance sheet.
Yes. You are born with a very specific set of initial capital.
Okay, like what?
Well, that initial capital is your family's resources, your baseline health genetics, even the geography of exactly where you were born.
Right, the starting line.
Exactly. And from that point on, every single skill you learn is a calculated capital investment.
Wow.
Every relationship you form is a joint venture. You are constantly trying to accrue assets, wealth, knowledge, reputation to offset the ultimate unavoidable liability, which is death.
Which is framed in such a stark way, like thinking of death as a liability is wild.
It is, but it makes sense in the model. Yeah, because they point out that dying without a will is literal business bankruptcy.
Right.
Because if you haven't managed your succession plan, the state just steps in and liquidates your assets. It's literally corporate dissolution.
And what's truly fascinating here is how this concept applies to physical health while you are still alive.
Oh yeah, this part was intense.
Your body is framed as a depreciating capital asset. Just like a piece of factory machinery, it loses value and functionality over time.
Right.
So under this lens, health isn't viewed as an inherent human right. It operates much more like a subscription service with recurring fees, your deductibles, your copays, your gym memberships.
Okay, that makes weirdly perfect sense. So a trip to the pharmacy isn't just about, getting better. It's literally an expense report.
Precisely. Doctors, medications, medical equipment, these are your cost of goods sold, or COGS.
COGS.
If you run a business, COGS are the direct, required maintenance costs to keep your primary asset functional enough to keep generating revenue.
And your body is the asset.
Your body is no different. And those who can't pay those maintenance costs, they are, quite bluntly, priced out of the market.
Okay, I can almost wrap my head around treating my trips to the doctor as maintenance costs on a depreciating piece of machinery.
Sure.
But I have to push back on the romance aspect. Wait, isn't love the one exception here?
You'd think so.
Like, what about unconditional love? The kind of love a parent has, or deeply devoted partners? Surely that exists completely outside of a profit and loss statement.
That is the most natural objection to make, but this framework strips even love down to the studs.
Really?
Yeah, it argues that romance is actually the ultimate value exchange. You offer something, maybe it's your loyalty, your attention, your physical attractiveness, or your charisma in exchange for affection, security, or status.
That feels so transactional.
It is. Even what we call unconditional love has a hidden underlying condition.
Which is what?
The other person must keep delivering the expected value, even if that value is just the emotional fulfillment you get from caring for them.
Man, that is cold.
It's very cold.
But I guess when you look at how people date today, I mean, dating apps are basically just hyper-efficient marketplaces,
Oh,
right?
absolutely. They are competitive commodities markets. Every right swipe is literally a bid in a silent auction.
Wow, a silent auction.
You are looking at a profile, assessing their marketing material, and deciding if you want to invest your capital, your time, and attention into this asset.
Yeah.
And just like in economics, the scarcity of highly compatible partners drives up the emotional pricing. You have to offer more to get their attention.
Which explains why people spend so much time curating their profiles. They are basically trying to boost their IPO valuation before going public.
That's a perfect way to put it.
And then marriage, this absolutely blew my mind. Marriage is described as a literal corporate merger.
Right. Think about the timeline and the mechanics of how we structure long-term commitments.
Okay.
The engagement period. That isn't just about planning a party. That is your due diligence phase.
Oh my gosh.
You are auditing the other person's life, their habits, their family, their financial debt. The vows are the joint venture agreement outlining the terms of the merger.
And if the venture goes south, divorce court is simply where the breach of contract penalties are enforced.
Exactly.
It is a resource-based negotiation from start to finish. Things like prenups suddenly make a lot of sense. They are just severance packages negotiated in advance.
Exactly. It removes the mystery.
Okay, so if our internal worlds, our bodies, and our romantic partnerships are governed by market forces, it completely recontextualizes the external world.
It does.
What happens when we look at our higher ideals? How do the rules of business apply to goodness, faith, and charity?
Right.
Because giving money away for nothing in return seems like the exact opposite of a smart business move.
You would think so on the surface, but charity is framed here simply as the business of redistribution.
The business of redistribution.
Yeah, you aren't giving money away for nothing. You are buying what sociologists call social capital.
Oh, I see.
Good deeds buy reputation. They buy tax deductions. Or they buy the emotional dividend of feeling good about yourself.
Yeah.
It is a non-financial profit, but it operates exactly like a profit.
And the charities themselves operate like corporations.
Very much so.
They are competing for donor dollars. Just like tech startups are out there chasing venture capital.
Right.
They have to segment their market, target high net worth individuals, and have a clear value proposition to beat out the charity next door.
And if we connect this to the broader spectrum of human behavior, the flip side is also true. Crime operates on P&L statements.
Profit and loss for criminals.
Exactly. An illegal enterprise has to calculate risk-reward ratios. They have supply chains and customer acquisition costs.
Wow.
In this framework, morality isn't some divine law handed down from the cosmos. It is just the preferred regulatory framework of the majority.
Morality as a regulatory framework. That is wild.
It really reframes things.
It basically acts as a barrier to entry, protecting the legal ventures from the illegal ones. So what does this all mean for religion?
That's a huge sector.
Yeah, putting money in a collection plate, reading this section, I couldn't help but think it feels like buying a futures contract on your soul.
That is a brilliant analogy. The idea of a futures contract completely aligns with what the text is arguing.
Oh, good.
It explicitly calls churches faith-based franchises that are in the business of hope. They run on a very reliable revenue model of tithes and offerings.
Right. But what exactly is the product? Because if I go to a store, I walk out with a physical item.
The product is afterlife insurance.
Afterlife insurance.
Yeah. The value proposition relies on the principle of deferred delivery for an entirely unverifiable product.
Oh, man.
You are paying your premiums now, in this life, for benefits that will supposedly be delivered post-mortem.
Which has to be the ultimate trust exercise in the history of commerce.
It really is.
How do you possibly maintain a business model for centuries, no less, around a product that no consumer can ever verify they actually received?
You do it through network effects.
Network effects, okay.
The more members a church has, the more social proof it generates. When you see thousands of other people investing in this futures contract, It makes the investment feel infinitely more secure and attractive to newcomers.
Because everyone else is doing it.
Right. The text points out that the most successful pastors or religious leaders are essentially the CEOs of intangible assets.
CEOs of intangible assets.
Yes. They collect surplus revenue, and instead of distributing it as dividends, they reinvest it into mission expansion, building bigger buildings, and growing their market share.
Okay, so once we realize that our personal, emotional, and even spiritual lives are functioning as hidden markets, we can start to see how we navigate the massive artificial structures society builds around us.
The macro level.
Right. Things like education and government. We interact with them every day, but we usually think of them as public goods, not businesses.
Well, let's look at the mechanics. Education is fundamentally selling a promise.
Okay.
What is a diploma or a specialized license? It's an artificial barrier to entry.
Oh, like a toll booth?
Exactly. It is a gateway designed by institutions to restrict competition for high-paying jobs. If anyone could just walk in and be a lawyer, the wages for lawyers would plummet.
So the degree artificially restricts the supply of labor.
Right.
Meaning when a student takes out a massive student loan, they aren't just investing in themselves in some poetic way.
Yeah.
They're performing a very cold business calculation. Does the return on investment, like projected future wages, justify taking on $50,000 of tuition debt?
Exactly. It's a capital expenditure. Now, apply that same logic to the government.
Oh boy.
We don't exactly opt into the government, but it still functions as a business. It is the monopoly provider of security, infrastructure, and legal tender within a specific geographic territory.
Which paints a pretty bleak picture of things like civic duty. If the government is a monopoly, then taxes aren't a patriotic contribution, they are mandatory subscription fees.
Mandatory subscription fees with steep penalties.
Yeah.
If you decide to cancel your Netflix subscription, you just lose movies. If you refuse to pay your government subscription,
You go to jail.
you face service termination, which in this context means your assets are seized, your licenses are revoked, or you are put in a cage.
And that makes voting look entirely different. Voting isn't this sacred democratic pillar, it's just a shareholder meeting held every few years.
Exactly.
And most of us citizens are acting as entirely passive retail investors, just hoping the board of directors doesn't tank the stock before we retire.
Precisely. You are a minority shareholder with almost no voting power.
Here's where it gets really interesting, though. Because it's not just these massive, imposing institutions like the government or Ivy League universities.
Right.
It's the micro choices we make every single day. Think about scrolling on your phone or trying to buy a plane ticket for a vacation. You think you are relaxing, but you are actually standing in the middle of a hyperactive trading floor, right?
Absolutely. Let's look at travel. That is the perfect example of the pleasure economy at work.
How so?
Airlines use dynamic pricing and price discrimination. They are constantly adjusting the price of a seat based on demand, booking time, and even the personal data they have on you.
Oh yeah, clearing your cookies and all that.
Right. The person sitting next to you might have paid half of what you paid for the exact same experience. But the internet itself is the ultimate manifestation of this transactionality.
Because of the two-sided market.
Right. In the digital space, you have to realize a fundamental truth. You are not the user. You are the product.
That's always so unsettling to hear.
But it's true. Every time you open a free app, you are being routed to advertisers in real-time auctions that happen in milliseconds.
Wow.
In the attention economy, your attention is the inventory. Every search query, every second you linger on a video is a microtransaction.
Literally every second.
Every search is an intent signal that is bought and sold before the web page even finishes loading on your screen.
It's incredible. It all comes back to sales and finance, which the source says are essentially the fundamental mechanics of being human. Sales is the verb of existence. You are constantly selling yourself. You sell your competence in a job interview. You sell your charm on a date.
Yeah.
You are even in sales when you're a parent trying to articulate a value proposition to get your toddler to eat broccoli. Like, eat this and you get dessert.
Yeah.
That's a sales pitch.
And if sales is the verb of existence, finance is the scorekeeping.
Ooh, I like that.
Think about how we manage our lives. When you take on debt, you are using leverage. You are making a calculated bet on your future income.
Right.
When you save money, you are calculating opportunity cost, choosing deferred consumption over immediate gratification.
Yeah, that makes sense.
Every single everyday choice, from choosing to floss your teeth to deciding to forgive a friend who wronged you, is a rapid risk-reward cost-benefit calculation happening in your subconscious.
If everything's a transaction and we are all basically just walking, breathing small businesses, it begs a massive question.
Which is,
Why do some people seem to win at this game so effortlessly, while others are constantly struggling just to keep the lights on?
the gatekeepers.
Right. The answer we're looking at is that the game has gatekeepers who completely control the board. Now, I want to pause here and be very clear with you before we dive into this next part.
Very important point here.
We are about to touch on some highly debated topics regarding monopolies, the political system, and the legal system. As always on this deep dive, we are impartially reporting the arguments presented in the source material.
Exactly.
We are not taking sides, and we are not endorsing these viewpoints. Our goal is simply to give you the unvarnished look at the mechanics the text claims are operating behind the scenes.
That's an important distinction to make because the analysis here gets quite piercing.
Yeah, it doesn't hold back.
The core argument is that market power dictates who gets to set the rules of the game. Let's start with monopoly power.
Okay?
If you live in a rural area and there is only one hospital within 50 miles, that hospital has extreme monopoly pricing power.
Because you have no other choice.
Right. If you're having a stroke, you can't exactly take your business elsewhere to shop around for a better deal. You pay whatever tariff they set, because the alternative is death.
The source also applies this directly to politics, arguing that the two-party system is essentially a political oligopoly.
Yes.
The idea is that insurmountable ballot access fees, massive fundraising requirements, and debate exclusions act as artificial barriers to entry.
Right, keeping the competition out.
Exactly, effectively keeping third parties out of the market entirely. They have cornered the market on power.
They even apply this lens to history.
Oh, really?
Yeah, the pre-Reformation Vatican is described as having a centuries-long spiritual monopoly, controlling the sole gateway to the afterlife.
Wow.
The Protestant Reformation in this context wasn't just a theological shift, it was a disruptive market entry that broke the cartel.
That is a wild way to look at history.
The ultimate takeaway the source provides is that monopoly isn't a failure of the free market. It is the natural, intended endgame of successful competition. The most profitable business isn't selling goods, it's controlling the marketplace itself.
But wait, if the market is inevitably controlled by these giant monopolies and oligopolies, what about the law?
What about it?
Isn't the justice system supposed to be the great equalizer, the impartial shield that protects the little guy from being crushed by these massive gatekeepers?
The source takes a very harsh, mechanistic view of the justice system.
Okay.
They described the legal framework not as a neutral arbiter of right and wrong, but as an extortion racket, a highly refined business tool that actively monetizes coercion, uncertainty, and procedural complexity.
They literally call it a toll road with gates controlled by the rich, which is a heavy metaphor. How exactly does that work in practice?
Let's break down how they explain civil litigation first.
Sure.
Wealthy individuals or massive corporations can use what are called SLAPPs, strategic lawsuits against public participation.
SLAPPs, okay.
In these cases, the goal isn't necessarily to win on the actual merits of the case. The goal is asymmetric warfare.
Meaning what?
If a massive corporation sues a local journalist, they know they can outspend the plaintiff to impose completely unaffordable defense costs. It's a war of attrition.
Just bleed them dry.
Exactly. Most of these cases settle simply because the expected value of fighting drops far lower than the cost of just writing a check or issuing an apology.
The law as a muzzle with a price tag attached.
Oh.
And it gets even darker when you look at how the text explains the criminal justice system.
It really does.
They frame incarceration as a literal revenue stream. Explain how that works, because tying prison to profit feels incredibly dystopian.
The text uses the example of private prisons, which operate as a per diem business.
A per diem business.
Think of it like a hotel. A hotel only makes a profit if the beds are full.
Right.
If a private prison's revenue depends on a 90% occupancy rate to satisfy its shareholders, it is financially incentivized to lobby for stricter laws and longer sentences just to keep its hotel in the black.
Which creates massive perverse incentives.
Exactly. Furthermore, cash bail is framed simply as a price on freedom.
Wow.
And probation and parole are framed as charging monthly subscription fees for the privilege of not being locked up in a cage.
And civil forfeiture, this one really got me. They describe it as a shakedown with a badge.
Yeah, that's a tough one.
Normally, the legal system is innocent until proven guilty. But with civil forfeiture, police can seize your cash or your property without ever filing criminal charges against you.
Right.
It completely flips the burden of proof. The property itself is considered guilty, so you have to spend your own money to buy back your own innocence.
Exactly. You are forced to litigate against the state to reclaim your own assets.
Unbelievable.
Furthermore, the immense complexity of the legal code acts as a massive moat. It ensures that only those with vast resources can afford the specialized lawyers needed to navigate it profitably.
Right, creating that barrier to entry again.
Or, through lobbying, they can literally buy better laws, a concept known as regulatory capture. Even family law isn't spared from this analysis. The author calls divorce court a resource-based warfare economy where child custody battles devolve into brutal bidding wars.
It's just bidding wars all the way down.
The ultimate conclusion the source draws is that the law isn't a shield for the weak. It is the system's most profitable line of business.
Wow.
If you can afford the toll, you pass the gate. If you cannot, you are detained, silenced, or bankrupted.
It is a heavy, heavy framework to process.
It really is.
But to synthesize the journey we've been on in this deep dive, the underlying message of this source is that calling life a business doesn't actually cheapen it.
No, it clarifies it.
Exactly. It just strips away the illusion so you can see the board clearly. From a monk who is trading worldly comfort for spiritual enlightenment, to the parent who is trading their own sleep for their child's future, we're all exchanging value.
We are all transacting.
You are a walking, breathing small business. Your time is your currency. Your attention is your inventory. Your relationships are your most vital partnerships.
This raises an important question, and it's something for you to mull over as you go about your day.
Oh, I like this part.
If you are the CEO of your own life and every single interaction is a transaction, how do you define personal bankruptcy? Is it running out of money in your bank account, or is it running out of people who trust you enough to keep trading value with you?
Wow.
Think about how you are investing your inventory of attention today. Are you building social capital, or are you rapidly depreciating your assets?
I love that perspective. Are you just spending your attention or are you actually investing it?
Exactly.
Thank you so much for joining us on this deep dive into the brutal but undeniably clarifying business of being alive.
It's been a fascinating look.
It really has.
Yeah.
Might be time to take that diary of yours, open it up, and see it for what it really is, your personal general ledger. Go audit your balance sheet. We'll catch you next time. Consumer, you